Right, we're talking about the Chancellor's autumn statement just delivered, and of course it's the run up to an election in just 6 months' time. James, what do you think about the autumn statement overall?
Well, I think the Chancellor's done a pretty good job, actually. I think two things were really critical here. First of all, I would have been pretty nervous if we had had what I would have called a giveaway autumn statement or giveaway ahead, which was obviously politically very, very tempting. But looking at the macroeconomic, I think some really important things happening here. First of all, growth has been upgraded for this year. It's going to come in at 3%, which is better than really anybody looking at it out there had expected this year to turn out. And even more importantly, we've got some good growth figures going through for the next 3 or 4 years. So above trend growth for a long period of time. That's particularly important because, of course, we've still got a massive deficit. And the Chancellor was very, very clear that we still have a deficit, and that still means a lot of savings have to be made. Well, of course, the best time to make those sort of savings is when the economy is growing well. And that's exactly what the Chancellor is doing. So that by 2018, 2019, he's expecting to have a modest surplus. Now, a lot of imponderables along the way, but the plan has been set. And now, for a cynic, you might say, well, the plan was set a number of years ago. And the thing that's really disappointed, and the reason it's taking longer to consolidate than people would anticipate, is because the tax revenues haven't come in as quickly as people might have hoped. All sorts of reasons for that. Pay has lagged a bit. IoD surveys are telling us that pay is going to be increasing in the next few years. And I think it's really positive. And I think if that can come through, and it's certainly our expectation, we'll see that longer-term economic expansion the Chancellor is looking for continued on. So I think it's pretty positive along a lot of those ways.
Stephen, if we're looking at some of the technical changes to tax systems, rates and so on, what do you think are the main highlights?
Well, I think we expected some tax reforms, although this is the autumn statement and not the budget. We're now accustomed to being more detailed and fundamental tax reforms at the autumn statement as well. I think the first one that, of course, we've been calling for 2 or 3 years now is the SDLT slab system, which frankly
stamp duty land tax.
Stamp duty land tax, which was frankly one of the most the silliest forms, that where £1 of proceeds could add £5,000 or more to a tax liability. So at least we've seen that removed, and it's good riddance, frankly, to it. I think we're a tad disappointed that the top rate of 12% comes in at a lower level, 1.5 million, than we think is the right thing. And also perhaps that the top rate of 12% is a tad high, because the danger of that is that it means there are fewer transactions and a lower level of stamp duty land tax is collected because there are fewer transactions at the top end of the
market.
What
about other specific tax measures, to income tax rates, other specific taxes?
Well, the income tax rates, of course, we've been calling for a triple lock of the tax bands so that fiscal drag doesn't draw people into the 40% tax bracket and also the 45% tax bracket, just by the fluxion of time and earnings inflation and price inflation. So at least we've had an acknowledgement by the Chancellor this time that the changes next year are going to be not the same of increasing the personal allowance and taking the whole benefit off those off the higher rate taxpayers by reducing the tax threshold. So it's a very good move, but I think we would have liked to have seen a longer term commitment to
do.
It's still to do.
James, where are the benefits of this going to fall? What about the north-south balance, for example?
Well, I think that was one of the really exciting things, and we know that the Chancellor's been very, very keen on the whole northern powerhouse and the whole what's been going on there. He's been, likes HS3 as an idea of connecting those northern cities. We, of course, appealed to him to don't forget Liverpool and all of that. I think the thing there that's coming forward is there is a much more fiscal responsibility being given over to those places. Manchester's in the lead, and that's extremely interesting. A lot of talk now about turning those into technology centres. I think that's extremely positive. The other thing that's really, really positive about there is fracking. And fracking, of course, is something the IoD has been very keen on, but something that we have to appreciate that's been pretty controversial in the country as a whole. And I think one of the ways to really tempt people in that is to say, okay, your local region is going to keep the proceeds from this, and you can maybe use it for local projects, and I think it's a really great idea.
Stephen, the Chancellor's going to raise more money by action against the Googles and Amazons and the banks. How much revenue is that actually going to bring in?
Well, the distributed profits tax, which is going to be 25%, is estimated to raise £350 million by the time the measures come full into force. Now, you never really know, because these tax diverted profits, and is a profit diverted, or is it just where it's arisen? There are always these qualitative issues that come up. Also, we need to be a little bit careful on foreign direct investment, that we don't want to be winners in having a low corporate tax rate, winners in having good incentives for R&D and patent boxes and the like, but then people having a fear of how the system is going to be applied. So I hope they're going to be very clear in the detailed measures that authentic investments made by multinationals into the UK aren't affected by these measures. I suspect they won't quite collect 300 million.
Now, one of the catch cries of the last few years has been we're all in this together, and talk about those with the broadest shoulders bearing the burden. What does this budget tell us about that?
Well, I think the Chancellor made a really, really good reiteration of, in fact, what's been true for a very, very long time. Those with the broader shoulders are carrying the biggest burden. I mean, he made the point of saying that 20% of people are paying more tax than the bottom 80%. So that's a very, very progressive system. I don't think anybody's disagreeing with that, but I do think that there's a need to appreciate that, and particularly when we're looking forward into what other political parties might be advocating, appreciate, actually we do have a very progressive system. It's a good thing, but probably no need to make it even more progressive.
Yes, could I mention, perhaps as a final point, Simon, on the detailed tax measures, that sometimes it's said with the fiscal deficit, which quite rightly needs to be the top priority, I don't think any of us disagree with that, but that doesn't take away the opportunities for tax reforms that are valuable to individual businesses or to individual people. For example, that the spouse is now going to be able to keep the deceased spouse's ISA, and with the ISA rules applying to it. That measure costs £5 million a year. Frankly, nothing in terms of the amount raised, the 170 billion raised by income tax. It's nothing, but to those people, it's a valuable relief that the ISA doesn't die when your spouse unfortunately dies. So there's always opportunities to reform tax to the benefit of individuals, to the benefit of businesses that have an acceptable price that the Treasury, even with the deficit, can well afford.
Thank you both very much.
Thank you.